am not a financial advisor, so this is all up to you, and this is just what I do. Your money, your responsibility. Investing in stocks is not as scary as you think because you have control to an extent. And if you understand these, it will be less scary. I used to be scared because I did not know. I thought it was risky. I did not understand and I just had no idea, but I still invested. For example, I would invest like 50 euros, 100 euros. Invest the amount that you are willing to lose. Invest the amount that you don't need. With time, it took me 2 years, I guess, to realize this. And that is, you don't lose if you decide not to lose. For example, the stock is declining and you're like, okay, it's declining, let me take the money out because I don't want to lose money. And if you take the money out while the stock is declining, is sinking, that's when you lose money. That is when you lose money. For example, you invested 100 euros. The stock of this company is sinking, going down, declining, and you take the money out and you take 95 euros out, you just lost 5 euros. This is just an example, assuming you have one stock, like you are investing in one company. The same goes even if you invest in multiple companies. If the stock of this company is declining, sinking, and the stock of this company is also declining, sinking, and the amount, the sum, the total sum that you have decreases, so you take the money out, you just made a loss. You just lost money. So the way is to keep it there. Don't touch the money, leave it there, because if the stock is going down, it will go up again eventually. Unless the company goes bankrupt, then the money is gone. Or if you take the money out before, then good. But most of the time, companies don't go bankrupt, I guess, I hope. So yeah, so maybe invest in companies that are established because it reduces the risk of them going bankrupt and you losing money. Basically, when the stock is going down, wait until it goes up again. And if you still want to sell the stock, then you can when it's going up because that's when you win. For example, your total sum is 100, that you invested 100. The stocks of these companies go up, increase, and then you sell it at, for example, 120, then you just earn 20 euros. When you buy stocks, I prefer to buy stocks when they are decreasing because that's when you get them for cheaper. Basically, the point is if you invest the money that you are willing to lose, that you are willing not to access for a long time, that you are willing to have it just sit there, that's perfect. Therefore, it's smart not to invest your savings because you will be emotionally tied to it if you do, because you're like, okay, that's my saving, it's important, and it's going down, so I better take it out. Yeah, no. That is exactly when you lose money. Invest the money that you are willing to lose. For example, you want to buy a new pair of shoes and you are like, okay, I already have enough pairs of shoes. Let me just put these 50 euros into the stock. Perfect. I am not a financial advisor, so this is all up to you, and this is just what I do. Your money, your responsibility. The most dividends that I have received so far was 7 euros, 7.25. Or 7, basically approximately 7 euros. And it's good. It's a it's like receiving money because I did receive it, but I reinvested it. So it's back into the cycle, so to say. Yes. So basically, the more stocks you buy from a certain company, and if they give out dividends, then the more dividends, the higher amount of dividends you will receive. So yes, it is currently